Good evening, everybody, and welcome to another edition of Live Market Analysis. It's certainly a pleasure to be with you as we talk markets 1 hour later, depending on where you are around the country. What are we now, 3-4 time zones? I don't know. Either way, I hope you found me. Let's head over here and talk about the disclaimer, which says that everything we're going to discuss tonight is general in nature, as not taken into account your personal financial circumstances, objectives, or particular needs. So before acting upon this general advice, you should consider carefully or seek the help of a financial professional to determine its appropriateness for you. Trading and investing is risky. You're going to lose money at some stage. 100%, I guarantee you'll lose money. It's how you deal with those losses that will define you as a trader vis-a-vis success or failure. I certainly recommend that you learn to deal with them. It's always you that's responsible for the stuff that you do and not me. You ask the questions, I'll give you my best technical analysis read. It could be anything from the world of stocks, bonds, commodities, crypto, FX, indices, or it could be money management, methodology, or mindset, the 3 M's of trading. Let's head over to the Amy Broker screen, and while you are thinking about what you're going to ask about today, we'll do our portfolio management model, which defines our total portfolio risk depending on where you are. If you are trading US shares, and this is the benchmark that we like to use. If you're trading in Australia, well, there's a couple of different benchmarks we've been experimenting with over the last couple of weeks. Kicking off Nasdaq, double greens, obviously, short-term uptrend, long-term uptrend. You know, it's the 3 tent pegs I say for my technical model. It's a checkbox system. So if it sounds like I'm repeating myself every Monday, I am repeating myself every Monday, and that should be you should consider that peace of mind. That should be a good thing for you, because if I was being inconsistent, as I wrote tonight in today's Chart Watch Markets, that would be something you should be concerned about. But I promise you, that's my job, is to always be consistent, always consistent, always consistent, always consistent, because for consistency, you can see where you've screwed up. If you're random, you'll never know what you did right or what you consistently did right, because you're random, what you consistently did wrong. And I say, find out what works and do more of it, and find out what doesn't work and do less of it. And that's pretty much my model, everybody, or how it's evolved over the last 20 years. Full risk position, let's cut to the chase here. There are a couple of candles at the end there that aren't ideal, but they're not terrible either. I mean, downward pointing shadows, hey, they're a little bit black. But if you're going to manage your risk on those 2 candles, then I think you have missed the point of trend following. So FRP, full risk position on the comp. Let's head over to Australia, where actually we did move back to full risk position. We talked about this last week, and I reckon we had, because that'll be today, that's today, so Friday, Thursday, Wednesday, Tuesday, Monday. So we did have that candle, and we said if we closed above 8893, we would move back to FRP, which we did rather emphatically there on Thursday and Friday. Actually, pretty good session. And then today, as many of you probably enjoyed today, if you're in New South Wales, a public holiday, so I wouldn't read anything into that price action. If you were going to read into it, you'd say there was a bit of supply coming in where we'd absolutely expect it to be between 8991 and 9055. So you wouldn't be too concerned about it either, particularly given the strength of the 2 candles that precede it. Apart from those last few candles, we do have a short-term trend back in place, which is encouraging. Long-term trend was never in doubt. Price action has improved because we're actually back to rising peaks, rising troughs. So that means we are also FRP here in Australia. I'm just going to try and center myself a little bit there. I'm a little bit askew, but no, the A600 is not askew. That is FRP also. Where would we grow concerned? We saw lower peaks banging off 89.91, big black candles, close bit below 87.31, which is kind of a no-go, no-go, I think, for the Aussie bull market. So 2 FRPs, we're going to do the whip around the grounds and see if there's anything that will push us off this position. Let's start. Actually, we'll go to the US. I don't think we've done the Russell for a while, and we're being a little bit naughty, actually, because we should check it. And we're pretty happy with that, all things considered. I know there's lots of redundant arrows on there, because I haven't covered this in ChartWatch for equally long, and maybe I need to whack this back into ChartWatch just for those of you who want the official read a page of technical analysis version. But I think it's worth recovering, because there you go. We didn't even notice. Very naughty indeed. We didn't even notice that the Russell 2000 is trading at an all-time high. Hands up if you noticed. I'm sure some of you are doing the due diligence and checking this one also. So literally Friday. Hayden's noticed. Literally Friday. So let me rewind. I'm going to cut that bit out of the recording and say, hey everybody, guess what happened on the Russell 2000 on Friday? I've been watching this like a hawk, and I've just been itching. I've been holding back in telling you because I wanted it to be a big surprise. And the big surprise today is that the Russell 2000 has made a record high. Look, it doesn't matter when we found out, because all we're doing here is looking for red flags. Is there something ominous or sinister in this chart, which this is our other benchmark in the US, that would suggest to us we shouldn't do what the Nasdaq tells us, and there isn't. And in fact, it's even better that's happening. So that's really encouraging. Heading over to the French market, and that is fine. That is very solid. So is the DAX, the Euro Stocks 50, very good as well. And the FTSE is immaculate. Wow, that is solid indeed. And so is the Spanish market. So are we seeing coordinated risk seeking around the world? It's starting to look that way. And that's when, we tend to get the lowest volatility, longest running sorts of bull markets when money is seeking risk all over the world. Nikkei is just magic, isn't it? That is a big win there. And we did talk about last week, didn't we? We talked about the Japanese bonds and how those bond yields are generally rising, and therefore the big Japanese pension funds are looking to repatriate funds back into Japan. And one of the key beneficiaries there is the Nikkei 225. And I don't do fundamentals, but I do love my macro, don't I? I do like to understand from a bigger, broader perspective where the money is flowing, because that's going to create trends. Nifty 50 is fine, and Shanghai Composite obviously hasn't traded last week, or at least for the last few days of last week, and that is still very much intact. But given that it hasn't traded, we'll move past that one fairly quickly and go to the Aussie sectors. Discretionary is okay. Energy is not okay. Financials is okay. Gold is fantastic. Healthcare is, I'm going to say, not okay. Technology is, I'm going to say, not okay. That is not ideal there on technology. The materials is okay. That's starting to look very good on resources as well. And look at that turnaround, the bloody long-term trend ribbon. Who would have thought, hey? It would once again define perfectly that go, no-go of that bear market, bull market transition. Real estate is not okay. Staples is not okay. In fact, it's terrible. Telecommunications is not okay. Utilities is just okay. And wait a second, wait a second. Where's this bull market coming from? It obviously resources is going bananas, so that's starting to contribute. But then financially, that's it. Oh, that's it. That's our bull market. The old tin pot, ladies and gentlemen, at its best. A few banks and a few resources. Nothing to push me off. That's a little bit disturbing, but still not enough to push me off my FRP there. Let's go to the line charts, and then we'll go to London Metals Exchange. Aluminium still looking very good. Hey, if we get equities going bananas and base metals going bananas, then we've got something really special. We'll look at iron ore a little later on. Copper was breaking up, by the way, but you would have read my analysis last week in Chart Watch Markets. Hey, nickel might even break above that long-term trend ribbon. You never know. Lead has. Well, there you go. And we know that tin and zinc were both already looking pretty good. I'm liking the look of that. And of course, it's supporting, isn't it? Supporting, you go back to macro flows, it's supporting our resources market as well. And if you're not looking at those big macro flows for the Aussie market, you definitely have your head in the sand. Won't bother looking at lithium this week because, we haven't had any trade, and it's pretty much flatlining for what we did have. Let's head over to the... I'm trying to figure it out because I'm not going there. I'm going to Firefox, of course, because the old Chrome doesn't work anymore. And we're going to look at the Global X Lithium Battery ETF. Well, we're not looking at lithium, but we can look here and we can see that lithium stocks globally are doing very, very well, even though the lithium price isn't. So a bit of a fund flows / re-rating there. But that's not where I intended to come or bring you to start off with. I wanted to obviously keep going with our analysis of metals, and we're going to go to precious metals now and silver, and all hunky-dory there. So an immaculate trend. We had a couple of black candles last week, but they were answered pretty quickly, and silver's starting to get that gold look about it, isn't it? Because gold just can't do any wrong. I mean, it has a black candle, it just keeps going. So silver's starting to look that way as well. But hey, look, things like this can happen too. So we'll be mindful, we'll be watchful. But right now, they're both very, very powerful trends. Platinum is starting to develop into that as well. We do have a platinum ETF on the ASX, or we have a precious metals basket ETF, and palladium, which somebody asked me about today. And I said, the question was, look, why am I not covering palladium? And it's not that it doesn't look good. I think it looks good. It just doesn't look as good as the other three. And I think it's kind of that laggard, that last one to go. And I think we talked about that last week, on that idea of, well, if everything is gone, that last one to go is not always the best one to trade. Just stick with the good ones. But there's some potential here as well. If you go to the weekly chart and just sort of put it into perspective, you can see if we stay on these weeklies and have a look at, say, that, much better, isn't it? I mean, there's more consensus, and that's what we want to see, is consensus. We don't want to mess with Mr. in between. So don't get me wrong, I don't think palladium looks bad. I just don't think it looks as good as the other two, and therefore, why waste your time? Heading up the list, we talked about London Metals Exchange copper looking very, very strong, and we're seeing a resurgence here on high-grade copper in the US. That's encouraging. Iron ore is not going anywhere at this point in time, and uranium is starting to be a little bit stuck as well. But I don't think it's end of this move sort of thing. It's just a bit of a pullback, but we'll see how that continues to develop. Some of the other energy complex there still in the doldrums, I would say, for many of these moving through the list. Doldrums or sideways would be a bonus for some of them, so pretty quiet. Let's wrap up our look. Actually, we do these often, but sometimes I forget. Looking at Bitcoin, that's a nice move there during the week. I must admit I'm struggling with Bitcoin and some of the price action, some of the moves. I mean, this last move here was a little bit at odds with what was happening before it, but it did bounce off that long-term uptrend ribbon, and it is still a broader bull market, so it shouldn't be that surprising. A little bit of a pullback here will be interesting. It's a strong move. The shallower the pullback here, I'd say if it stays above 120, like if you do not see a close beneath 120 within the next week, then it really, I think a lot of this market is probably caught short now, and a push here could start to cause them to cover shorts and a bit of hot money come in. So that one certainly looks very interesting, very warm, and Ethereum looks okay, but not as good. I think Bitcoin's the pick of the two there, but Ethereum's not terrible. Let us finish off our whip around the grounds with a quick look at bonds, and we'll start with Aussie bonds, and we're seeing the evaporation of your rate cuts if you are wanting them. We may be done. We may have seen the end of this rate cutting cycle. At least that's what the bond market's telling us. And heading to Japan, we have just they're reinforcing those rising yields, which is helping the Nikkei. And over in the US, we don't want to see much movement one way or the other here, particularly given there is a government shutdown in place. And things could get messy here, as in you'll start to see some of these yields rise, particularly those 10s, but probably the 30s as well, as we start to see a bit of risk aversion come in. So if that starts to pop into 495, you'll see a reaction in the Nasdaq. It will happen, so something to keep an eye on. Okay, let's head over to your offline requests. We're going to go back to Amy Broker and go to the candlestick chart again. Go back to our default Zoom, and I've got Tony with RZI as our first stock request, and that's Raiz. We've done some analysis on it recently. I want to say bought the dummy there. I mean, it actually coincidentally looked as good then as it does now, and it just went straight down. So what does that tell you? I'm going to go copy and paste. I'm not inviting fate, I'm just following my system. I talked about consistency before, and if that's what I had to look at, I would have no doubt on that day said that obviously there's a big point of supply not very far away that you need to contend with. I would have challenged you to consider reward to risk. I would have said, look, assuming this is the best reward to risk you can find, or it's the best setup, and it's the best setup with the reward to risk, then absolutely no objections would have been my phraseology. I'm not trying to distance myself from the call, but I think we all know, given my consistency, that's what I would have said. and it's going to be a little bit of ditto today. So certainly we've got a short-term uptrend. It's very clear. Long-term uptrend. The price action is, look, it's a little bit mixed overall, isn't it? I mean, it's not that decisive, not as decisive as we prefer. I mean, we're going to see plenty of decisive charts today. And what am I talking about? I'm talking about the sort of the overlapping nature of some of this through here. That's a nice move, don't get me wrong. But just the fact that there is a little bit of, what do we call it, drunken zebra about it from last week. I'm not too fussed about that little pullback actually, because it's happening from a point of supply, so that all makes sense. You get consolidations around points of supply. Now this is a good move, good candles, trends are developing, but the elephant in the room is clearly this major point of supply. And I think we had a look at it last time and probably weakened it here. I mean, we didn't get close to do much damage, but I do think there would have been some that would have spilled out here thinking, well, it's never going to go up again. So I reckon it'll be weaker this time. So I'm more encouraged this time. It's a stronger setup than last time simply because we're close to the point of supply and we're not showing much fear of it. So I'll stick by this call and hope it goes better than the last call, FRP, if you've got it. Actually, I remember I talked about the old CRP last week as a sort of changing the phraseology a little bit. We didn't like that one because you put in another letter and you get a different word. But I thought about maintaining risk position. Because FRP, I think, implies something else. I know I've used it forever and ever, but sometimes we think about things, we go, maybe there's a better letter in there. I think it's M for maintaining a risk position. So if you've got it, maintain your risk position. If you don't have it, that's where the plus 1/3 comes in. So I'm going to change my F's to M's, run that up the flagpole and see who salutes. Let's go to, thank you, Tony, for that one. Maintaining risk position plus 1/3, GML. You know, you can be flexible with these things, don't you? Gateway Mining, I think it looks pretty good. Getting a couple of thumbs up there. Other people are going, Carl, FRP, MRP, it doesn't really matter. I get what you mean. Short-term uptrend, long-term uptrend. The price action, again, similar to the other one, could be better. So if we're going for a score out of 10, this sort of, this push down with the black candles, it just knocks half a mark off for me. Okay, I like shallower pullbacks. Now you go, hey, Carl, it's okay. Don't panic. It was a huge run. It pulled back to the short-term uptrend ribbon, logged a big white candle, and some great volume went again. I totally agree with you, and that's why it's like a 9.5 out of 10. But I still don't like the fact that the supply side was powerful enough to cause these things. You know, if they were there in the past, they might be there in the future. I can tell you the fundamentals of this thing hasn't changed. They were the same. They're the same. They might have had some news announcements or whatever, but the fundamentals are the same, right? It's a liquidity-driven bubble here, and the bubble will go until eventually it bursts, and then this thing will go back to 2 cents. In 3 years' time, this thing will be 2 cents. It will be. There's no doubt about it. But in between, we're going to have a good time while there's a good time to be had. So the fact that it's still a piece of junk, you have to remember this, right? They're all still pieces of junk, and there are still people with very good reasons to supply because they know it's a piece of junk and they're taking advantage of the higher prices. But there's just too much fervour and interest, and they get overwhelmed, and sometimes they back off and they go, well, maybe I'll get more. I've got zillions of these things anyway, right? So I'm just trying to help you understand why, if I see a setup, why I might flick past this one and focus on another one. I don't like black candles. I want to see all white candles if I can get it. And anything less than that starts to bring off 0.1 of a mark or 0.05. You know what I'm saying? And this is all rather arbitrary. Trying to make it less subjective, a little bit more objective for you, but just giving you hopefully what my eyes are saying. But I'm going to head out here because let's say we're down to 9.5 out of 10. We're still 9.5 out of 10, right? Now we're going to go out here. I'm going to see if there's any reason to knock off another half a point or more than that. And I actually don't think there is. I mean, there's a bit up here, but they're nothing. They're wobbles. They're drunken zebra. There's nothing. It's a bit up here. I'm not even going to waste my time drawing those across. So it was fairly fluid on the way down, which means there's nothing really to hold it back on the way up. I always say fluid on the way down, fluid on the way up. So no, I'm going to leave that score of 9.5, 10, but it was everything else really checks out. And therefore, given that score, you won't find many out there that are better than this today. So I will go MRP plus 1/3. Mate, if you've got as much risk as you want on that, maintain it. Okay, FRP. If you don't, and you're looking for risk, and this is the best risk opportunity you can find, plus 1/3. Let's go to actually just a point of order. Is that the right way to say point of order? Mark called this one a turnaround setup. I would classify this, Mark, as a continuation setup. Okay, so. But you're on the right track. IMC is the next one, which I must admit I'd never heard of until this. Immuron, and probably not a good sign if I've never heard of it, simply because it means it hasn't come up in my scans. And we can see over here minimum turnover filter is 0, and that's why, because it's just, you can see it's. I don't even know this is a drunken zebra. It's not even that well defined. So it's crawling all over the screen there. There is some interest coming in if you zoom in down here, and some price action. But yeah, it's like I'm not gonna waste any more time on this. There's a start there. You know enough. You're correct. It's a turnaround setup. You know how to trade this if you want to do it. I can't imagine why, but why you would pick this one over. There's just so many other ones that aren't. That have liquidity, but if that's you, maybe you know the story. What do I know? Maybe you know the managing director or something, and he's spun you a fantastic yarn about how good that one is. What do I know? Let's go to the third one, which has more of a chart to it. Still plenty of overlap and lots of black candles. Yeah, interesting. And then let's just stop. Let's all just stop and just ponder that. What does that mean? What does it mean? Somebody type something in. I'm not, I do too much work in these sessions anyway. I know it's late. You're trying to stay awake. You're probably on your third cup of coffee now. What does that mean? It's going up, but is it just my imagination, or are you seeing this as well? Is that not a wall of black candles? And if we agree that it is, what does it mean? Peter's on the right track. Like, there is somebody in there, and I don't want to steal anybody else's thunder here. Indecision, Mark saying indecision, Peter saying a determined seller. Getting sold down, says Sue. Like, in spite of, isn't it? In spite of the fact that there's clearly, there is demand in the system. Don't get me wrong. We can all see there's demand in the system as well. What could be causing that demand? Like, what is persistently, despite this selling, let me guess, insiders or large holders that just feel like they've got too much of this crap. Selling every freaking day. They're selling every day. Like, when it's up, they're selling. When it's down, they're selling too, but they're just constantly selling. But there's demand in the system, so the price is going up. What is causing the price to go up? And I think it's important that you kind of connect the dots here, because it's not that we can't trade this. We can trade this. Like I said, if we see a good time, we're in it for a good time, right? But make no mistake, as soon as, and nobody's given it to me, I want you to give it to me, because I was about to say the words, and it'll give away the whole thing. Why is there this persistent demand? Particularly, I'll give you a hint, over the last few weeks, last couple of months, 3 months or so. Because it's actually starting to break those shackles a little bit. Is that fair to say? Because we're actually seeing a few more white candles, because it was almost completely black before. So we're seeing a few more white candles. Maybe we're starting to get rid of that supply. We're displacing it. Maybe we've traded with them. Look at the volume as well. So volume is elevated, which means we're interacting. But what's the demand? Where's the demand coming from? Come on, it's pretty easy. Okay, when you go to the Olympics, everybody, you win the race, but you don't come first. Like, somebody beats you, but you're in front of the third person. Haraju says silver. Okay, so there's just this, silver prices have increased. Okay, fine, if we got there, good. So silver's going gangbusters, right? And that is let's face it, what's happening now in chat rooms all over Australia is people going, "Oh, so what are the hottest silver stocks?" And how many articles have I written on Market Index? Hottest silver stocks, and this one's going to be in the list, right? And when they think the other ones have gone up too much, like BML or Mithril or whatever, they're still looking down the list. They're trying to find the one that hasn't, and that's just creating this extra volume. You can see it. I don't know if you can see where I'm pointing. Of course you can't, because, well, yeah, maybe if I go, but then my hands go. No, that way. It's this speculative fervor, right? And we're trading with that supply. Maybe we'll get rid of them. And maybe this could be the start of just a bunch of white candles. But what a fascinating case study. And hopefully you can start to look at that and just go, okay, I can see what's happening in the supply demand environment. It's just a picture. It's like in the Matrix, where there's all those little things coming down the screen, and they just look at the Matrix and they see the buildings and stuff. That's what I want you to see when you look at a chart. It's just, I can see supply and demand. Okay, let's keep moving. That was fascinating. Did I come to a conclusion here? Look, if this is the best setup you can find, it's starting to do more of the stuff we want to see, that we like to see. I don't mind it. I'm not going to tell you not to do it, because technically it is meeting my criteria, but you know how I feel about charts with lots of black candles. If that silver price, think about it this way, if we believe that the silver price is the only thing driving this up, right? Otherwise, if there's somebody getting the hell out of it for whatever reason, what happens if the silver price turns down? I mean, this will be the one, I think that'll be the hardest hit. Okay, let's go to Davis. Davis has LIT, and Davis just gave me 3 codes. Mark was brilliant, because Mark actually put turnaround setup, continuation setup, which I think is brilliant. If you're going to send them to me, and even if you're going to type them over there, tell me what sort of setup it is, and maybe give me a few ideas, and then I can, we can talk about whether you're on getting it, you're in the right track or not. But Davis has just given me 3 ticker codes, which I'm not all that enthused on, and I did email him back and I said, "Hey Davis, are you sure it's this one, right? Because I'm not going to really. Does anybody really want me to talk about this one? Really? Do I need to talk about it? I don't think so, because we're looking for pictures of excess demand. So I did email Davis back and I said, "Hey Davis, look, and I was being a bit cheeky. I said, did you mean LIT in Australia, or did you mean LIT in America? Because the one in America looks much, much better." So this one is the bonus pick for today, which is LIT in America, and obviously, where's my arrows? There we go. Short-term uptrend, long-term uptrend. Price action is like there actually isn't any price action. The peaks and troughs almost don't exist, because it's just going up every day for the last few weeks. Prior to that, there were rising peaks and rising troughs, and then the predominance of demand-side candles. So that is looking pretty good. And the global lithium stocks. Lithium price ain't doing much, but lithium prices, we looked at this before, didn't we? There you go. And that's why it was on my screen. That explains why it was on my screen before we started. So that is very interesting. And we'll come back to Australia, because that's where we are. And obviously ACDC is the same thing here. And I want to say I put that in on that day there. And certainly that day there was the first feature. It was one of the first things I put in when I got back from my holiday. So, that's 20-odd%, 25% in about 8 weeks isn't too shabby on an ETF, right? Which 25% on a stock is much easier to do, but on an ETF it's quite impressive. I mean, ETFs 25% is a yearly move for an ETF. Okay, let's two more FUN, which if we weren't going to look at LIT, we will look at this one, because this one's far more developed. In fact, what a great 2 to give me in a row, Davis, because I can say when LIT starts to look a bit more like this one, that's when we'll get a bit more interested in it. A bit more volume, a bit more upward price action, some cleaner candles. And I think this looks quite good. The only reason why I haven't put it in any of my watch lists is that it's not meeting my turnover filter, so I just literally haven't seen it. I've been blind to this one. The fact it's not meeting my minimum turnover criteria, which are pretty loose. I mean, an average turnover of $200,000 a day, 200,000 Australian dollars is not that much over the course of the last month. It's not that much. So you got to think, well, if it's beneath that, it's kind of just ticking over, isn't it? But often they will start here and then the interest comes in and they get onto the other one. And by then they've doubled in price. MRP, if you've got it, I like the fact that something is happening here. We've got that big move. Yes, it pulled back a little bit, but you held onto it, relatively speaking, quite well. It went from, God, I don't even know what that is. It's like if it was like a caterpillar or something, isn't it? It's like a black and white caterpillar. It's just horrific stuff. We know we don't look at them here. And then for some reason, it must have dug the right hole somewhere or planned to dig the right hole somewhere, and it's back in the news. So we have interest, and interest is the lifeblood of these crappy little mining stocks. And I might be confusing a few people by calling all of these little ones crappy, because you might think I'm trying to dissuade you from trading them. I'm not. No, the crappy, ladies and gentlemen, the crappier they are, the better they'll probably be. Okay, make no mistake, we're just in these for a good time, not a long time, but we shouldn't lose sight of the fact that 99 out of 100 of these, if they started at 1 cent before their big runs, they'll be at 1 cent again over the next few years, and you know that's true. T92 is another coincidentally good example of that. Terra Critical Minerals, uranium stock, starting to get some good stuff going as well. I'm a little bit concerned about some of the black candles, the frequency of the black candles here, because when you have these crappy little mining stocks and you do get that big run, when the black candles start to cluster, it's telling you that we've got long-term suffering holders that are looking at this as just an opportunity to get the hell out and go on and do something better with that money that they promised themselves that they'll do for years. It's not terrible. It could be better. If we're knocking off points out of 10, where are we? You don't have to type it in, but, you know, there's a big mosquito flying into my lights. I want to kill that thing. 7 out of 10? Is that where we are? You want to put some numbers in? Where are you at? 7, 7.5? It's that. So I don't want to guide you too much, but that's kind of a ballpark, isn't it? What are we at? I'm looking over here because that's where you're supposed to be typing. Donis has got 6. Jackie's at 5. I think it's better than 5, isn't it, Jackie? Sue's 5 as well. Is it 50-50? Oh, it's like a 6, surely. It's better than, if 50-50 is neutral, and less than 5 is a short. Roscoe's gone 5.5. I've got him up. I've talked him up to 5.5. Mark saying last candle gets it down to 5. Okay. Well, the good news is we've roughly got a consensus here that we can just keep moving, isn't it? Would you maintain risk position on this? Look, if you got into it on, say, this candle or this candle, and I totally agree. Like, don't get me wrong, here and here. In fact, I think I ran it on one of those two candles, if not both. So if you got in on those, I'll be frustrating the hell out of you because you go, Carl, you told me to buy it, and now you're saying it's a 5. Yeah, that can happen. You can start at 10, it could be a 5 in four candles. We don't know the future. But on those days there, if I was to ask, look, as a turnaround setup, how's it looking? We're going to give it close to a 10, aren't we? Is it just a pure turnaround setup? Doesn't mean it's going to turn out. We don't know. I know that's frustrating, but it's just the way it is. So where is it now? It's 5. So we're actually changing the context a little. We all agreed for people that aren't in it, then it's a 5 out of 10. Move on, skip. But let's put ourselves in the shoes of, okay, well, I bought it on those candles. What do I do now? Can I possibly continue to run a full risk position here? And I don't think you can. But I don't think you want to be all out of it either. I think you need to see this through a little bit. I think we've got some pretty obvious places to set reduced risks. So certainly beneath there, we close beneath that. I'd say we're ZRP on a close beneath that, aren't we? Or very close to it. But I think we might be 2/3 here. We might be half in, half out, and just trying to manage our capital, not so much as trying to minimize risks here, but just to maximize opportunity elsewhere. Let me say it again. I think we're being quite proactive, not just here, but across the board at the moment. It's a function of being sport for opportunity. So we're managing risk here, not so much to minimize our losses here, but to maximize our profits or maximize our opportunity elsewhere. Hopefully that that's resonating a little bit. But thank you for those, Davis. Look, keep sending them in, and I'll either spend time on it because I think there's something interesting there for everybody, or I won't. And we actually got some really interesting stuff out of those. Appreciate your input. They are the offline requests. I'm going to scroll up to the top. We'll do onlines. We've got 5 time zones now, confirms Peter, which is madness. And I'm not, I'll take some of the blame, being in the great state of Western Australia, because we have had referendums. I'm not kidding. We've had referendums, state referendums on daylight savings. We've had 2 within my lifetime, I'm pretty sure, and both of them went south because the curtains will fade and the cows are just beside themselves. They're completely distressed, and that's why we don't have daylight savings. I don't know. When I was younger, I thought it was good. Now that I'm older, I'm ambivalent. I don't really care, honestly. I don't think it matters one way or the other. Let's go to GMP. And we've got some problems here. Does this fall into that category of managing risk to maximise opportunity? If we had no opportunity, right, and we've all been doing this long enough to know that sometimes the ASX 200 is crickets chirping, and we're in this and we go, I'll give it another day, but there's nothing else to do, and it's one of the few uptrends out there. But I think we're a manager risk here on the basis that there's other stuff to do, or am I being a little bit pedantic? There's some supply here. It is bouncing off the short-term uptrend ribbon, so it's still good. Can we agree that we would, just take some off the table? Just minus a third, which means that we're still, plus 2/3 RP here. Precautionary measure, free up that capital for somewhere else. I think that's where I am on this one. Otherwise, it's still very strong. All right, let's keep moving. Neil saying, putting some colour around this, he's in a decent profit, and I should read the full comments first, shouldn't I? Minus 1/3 after the last 2 candles, or see how it interacts with the trend ribbon. No, I think that the group has spoken. Neil, I think we're going for minus 1/3, just on an opportunity management basis. And yeah, I don't want to see it close beneath that long-term up trend with the trend ribbon with a black candle. It might tickle it a couple of times, but I don't want to see it close there. I'd probably just knock another third and maybe just have a third for the long-term trend, notwithstanding it, really bad candles. Okay, let's go to Donna's thoughts on MLM. Oh, MLM, what's that one? Is that in the US? MLX? MTM? Do you mean Metallium? That one? Yes, I can hear you. They're all US. Okay, no worries. Because I saw the CAT, so I thought it might be the Aussie one. That's okay. We'll do those at the end. All good. No worries. Let's go to ARU for Roscoe, and I put this in tonight because oh shit, I'm going to really contradict myself here, aren't I? What did I say about the laggard? What did I say before, everybody? Oh, yeah. I made a rod for my own back. So because I ran this as a feature because I don't want to miss it. And yeah, no, I have actually screwed myself, haven't I? Because if we look at, say, something like that, and we look at, say, something like that, and then we look at something like that, which hasn't got up yet, but hey, it's starting to look good too. What did I say about not buying the laggard? Look, short-term uptrend, long-term uptrend. Then watch me try and justify this now. 2 really good candles eating into this point of supply. Volume's okay, isn't it? Volume could be better. But there is an increase in volume. So we've got more interest. We've got more trading with the supply side. Am I convincing you? There's still this up here. I think we're in the phase of adding risk, isn't it? Is this the best setup out there? That's the question. And I won't ask for a score out of 10. Peter's going thumbs down. I think it's high 7s, isn't it? 7.5, maybe an 8. there's lots of good stuff going on. Is this the best setup we're going to find tonight? I don't know. Let's see what other setups we find tonight. But in the meantime, because it does meet my criteria, I will go maintain risk if you've got it. I think that's a pretty safe thing to say. And if you do find at the end of your journey that this is the best one, then plus 1/3 if you don't. But let's look at Roscoe's next one, because it is BRE. And I wonder if Roscoe's, being tempted by the same fate, which is he's on BRE. I bet he's on BRE. He's probably on Linus as well. He's done very well out of those, and he's just having a look at ARU starting to go, let me add 1 + 1 and end up with 32. But this one, as per the last update, is still MRP. I mean, I can't fault it. Oh, I can fault it, but look, I think it's still MRP, and the question is plus 1/3. So that's the only issue. And I'm going to say it's a bit late for us. This is going to go in tomorrow's feature uptrends, because I don't worry about round numbers for those. I just run it if it's met the criteria. But for us, it is a bit close to $5, isn't it? And we know we would like or prefer to be taking some money off the table there rather than adding it. And I'll refer you to, was it EOS, which hit $10? And can I get a thumbs up here? Did I see, when I see candles like that, I want to see if I actually drew them in, because they just look like ones I draw in, don't I, at the round number. How many people knocked some out there at 10? And I reckon you're doing more. So we had a compulsory minus 1/3 here at $10. And I was thinking of you, Neil did. I was thinking of you last week when it happened. It closed with such a strong candle, and I was wondering whether you'd still have the guts to take the money off the table in the face of that round number. And if you waited for the end of the candle and made a decision based upon that, I don't mind. But I still feel so strongly that you don't ask questions, because you'll doubt yourself, and then now you're kicking yourself a little bit, aren't you? Or you at least you got that third out, and now you're 2/3 or fully out. So round numbers do funny things to stocks, ladies and gentlemen. We would have gone. We can get rid of that now. That was for Monday, wasn't it? Was it that candle? I can't remember. Well, if that's today, that's Friday, Thursday, Wednesday, Tuesday, Monday. Yep. So that's that candle there. And we've got copy paste. So we had a job to do, and that was minus 1/3 here. And I would say, as a cautionary measure on that candle, another 1/3, just because I don't like it at $10. I just don't like that candle at $10, and it's big and it's black. And then I'm going to be so bold as to say I'm going to knock this. Or if I wasn't, I would certainly be doing it. This is just me. You can do whatever you want on a close beneath these two shadows, really. So that would be the only way I'd still have any risk on this, or I'd split that into like a sixth if I just wanted to keep some skin in the game. And there's no harm in doing that. In fact, now I'm talking myself into this idea of just keeping some skin in the game. Because if you've got some skin in the game, here's why. This is why this is really important. This is the most important thing I'm going to say to you tonight. So if you're still awake, listen. If you're not awake, then you won't hear it. You'll probably hear this in the recording. But the importance of keeping some skin in the game on a stock like this is this. If it starts to go back up, 10, 50, whatever it is, if you've still got some skin in the game, it will be so much easier for you to add back in and ride this into 20. If you are all out, it will be extremely difficult for you to pull that trigger and get back in at 10.50, because you've made good money on it and you will not want to lose that profit. You will want to protect that profit, and that mentality of trying to protect that profit will prevent you from doubling your money again. But even if you just left that sixth in, you are going to be infinitely more open, to just adding. It's like you're still making money. Like in your mind, you never stop making money. So that's why you don't want to let go of your whole position here, even though there are some decent candles to suggest we'll have a pullback. And I don't think this is the end of this thing. He's like, Carl, why are you getting out? Like, it's EOS. It's got space lasers, mate. Like, seriously, space lasers. Like, you can't get any better than space lasers. And I agree. It'll probably go to $20 for all I know. But it might pull back to 750 and look horrible and shake everybody out before it does it. And that's why I have to follow my rules, which is I don't like big black candles, and I like them even less when they're at a big round number. But I still like this idea of keeping skin in the game. And even if it does get beneath that those candles' lows, it's still doing it. Maybe beneath the short-term trend, we might talk about it. But anyway. EOS, which I don't think is requested tonight, but we digressed. We were talking about BRE, and I did label that one, and that's how we skipped across this the round number. So same ditto here on BRE, just to reiterate, maintaining our risk position. If we didn't have any on this, I think you're too late for now, because I think $5 will be, like EOS, a level where this will pause. We will see some supply. We've got a wall of excess demand, but we will see some supply, their natural supply, and that supply will hit that excess demand. And when supply hits excess demand, there's less excess demand until it becomes a equilibrium, and then we go sideways. And that's when we're going to want to put our money somewhere else and do something better with it. So I'm still very much 1/3 off the table at $5 here, and therefore it probably precludes us from adding risk at this stage. But MRP in the meantime. Let's go to, I'll do you Toronto one. I think that is later, Roscoe. And Michael's asking LTP, which has had some issues, hasn't it? A few black candles popping in. Michael asking about -1/3 here. Yeah, it's a little bit of a problem, today's candle. No volume in it, and we know it was a quiet day. Can I give it one more candle, Michael? And I know it's frustrating because I'm basically inviting disaster, aren't I? I'm inviting it to close below that trough there, which is the obvious place to manage risk. Obviously, and there's two obviouses there. Obviously, we don't like this. We don't like that. But this is good. And these two are shallow enough and, not so sinister. And today is a very, very low volume day where we know New South Wales wasn't there. So it's close, but I think I'm going to give it another day. Obviously, this is our point of no return anyway. So, we're going to manage our risk here. But let me just give it one more candle. And, obviously, if it's another candle like that one, I agree with you. And hopefully it's not. And then we're still going to be able to continue in this short-term uptrend. But I think today, in and of itself, under the circumstances, is probably too much to do anything with just yet. Hopefully that's a satisfactory response for you. XEC. The XEC is worth a look, says Robert. The XEC, what does that mean? Because I don't have an XEC here. The XEC. Robert, clarify. I'll meet you down the bottom of the list. Sonia, in the meantime, saying WBT, which is looking very, very good. So we've had some ad risks on this. It's been featured a few times. And Sonia, you'll be very pleased, I think, to see it get through that point of supply. And the next area that may offer some resistance to the upside is up there. So I'm pretty happy with that. I don't think there's a whole lot in between. And therefore, this looks pretty darn good. And I'm wondering why I didn't see it today. Why didn't I not see that today? Because it's perfect. I mean, it's literally perfect. It's literally everything I want to see. And maybe it was in the broader list and I didn't shortlist it because I was really, really tight today. Things had to close on their highs. And without going into the back end of market index, which I don't want to do right now, I can't confirm. But let me say, for everybody here, that 100% very happy with this one. Very strong setup. MRP plus 1/3 on that one. No problems at all. We're talking about the indecision on SVL. A few people responding. Thank you for doing so. LU7. And this might be a US one, perhaps. DBO, TNB, LU7. No, I'm just in the wrong place. There we go. And I can see it right there. There we go. I like this. This is good. Not meeting my turnover filter, is it? No, it's not, and that's why I haven't seen it. But if I had seen it, I would have put this in today. I like this. I mean, look, we talked about one before where we said, oh, there's a bit more Arafura. There was some extra volume, but I said, I stopped it and I paused. I said, because I knew it could be better. Remember, I was trying to make the case for it. Okay, well, I think this, if we look at this here, where it tried to make a low there and failed, the order of magnitude change here is far more substantial. This is the picture that I want you to see and associate with. Okay, that's some real interest coming in. I think there is. We've obviously broken above the long-term trend ribbon, as you know, ladies and gentlemen. As you know, beneath there, don't worry about them. Above there, start to look at them. Like, I mean, you could not have. Like, perfect. Little bit of a drunken zebra, but I think today's volume, today's candle is setting it on the right track. There's some interest here, and we've got some movement, and the two together are powerful because it breeds more interest, which breeds more movement. So it's a yes for me. It's a very specky one because it's as turnaround setup as you can get, isn't it? And it hasn't even met the turnover filter yet. So take all of these things into account, and they might knock a half a point off or a full point off by the time you get to the end, and you're comparing this against the other stuff that you're seeing tonight. But it meets my criteria. I'm happy. More than that, more than it meeting my criteria, I'm happy to add risk to it. MRP, maintain your risk position if you have it already, adding some risk if you don't. Let's go to DBO, which has started to do more than the previous one, but coincidentally, I'm sure they're different stocks, but they just moved in the same way. Once again, ladies and gentlemen, we see there's nothing to see until they get above my long-term trend ribbon. It is the exact perfect delineator of night and day here. And again, we're seeing the interest come in. We're seeing the volatility come in. We're seeing all the good stuff that needs to happen on that turnaround. The price action is improving. I'm still happy with this one. I know it's had a little bit of a pullback over the last few days, but that pullback, I know the candles aren't great, but that pullback is very mild considering what it's done. I mean, it's gone from 1.5 cents to 6.5 cents. So that's like a 400% increase, and it's pulled back a bit. So I think it's fine. If I had it, I'd still be happy to hang on to the risk that I started with, or the current risk position. I'm not adding risk right now, obviously, because the candles don't warrant it. But next white candle high close. Yeah, I think you're adding risk here again. Next demand side candle with a high close. Demand side candle high close. Next demand side candle high close. Plus 1/3. I think I've added some more letters to that acronym. Let's keep going. We've got TMB, which is, I'm going to go ditto on that last one. Nothing to do right now. There wouldn't have been a lot you could have done with it, but it's in play, and that's the important thing. Holy moly. Wowzers. Okay. It is the time. It is the season, isn't it, ladies and gentlemen? It is going nuts right now, and you just have to go with it. Just relish it. Just have a crack, because it will go back to normal, and this stuff will be impossible. It won't happen. So, look, I can't buy it now. I'm still on MRP, I think, and you're just waiting for the next few candles. We need to see a reaction now, okay? We're seeing a supply-side response. That's not what I wanted to draw. We're seeing a supply-side response. Clearly, it's gone up a zillion %. So we're seeing a supply-side response. Supply's going to respond in these scenarios. It's inevitable. Now we want to see how far they take it back, how the demand side responds. Obviously, the stronger the demand side response, the more legitimate this one's aspirations are. It might not be 2 cents in 12 months' time, like 99 other ones will be. Maybe it's going to be the one. I don't know. But if it's going to be the one, it'll hold up there. It shouldn't come back really any further than now. Okay, it's starting to be a bit more than it should. that shadow, that black candle, today's follow through. Okay. I'd still be MRP, certainly not adding risk at this stage because there's no reason to do so. But again, let's see the demand side response. If we see something, a nice white candle, sharp response here, shallow pullback and go again, that's order of magnitude. But I just don't think, this. We can look at this next week and the week after. But Robert's asking for a minus a third on that one. Okay, well, that's a different perspective. So Robert's saying he's already on it. It might be that one more candle thing again. I don't mind. Look, just on the basis of that and that, those two, that would be enough to pull the trigger. Today wasn't exactly a great follow through. So if you're kind of running, to go back 60 seconds, I said it's already at the stage where it's pulled back more than you really want to. On that basis, also. And I was looking at it then in terms of would you add risk? We've all agreed we wouldn't. But if you had it, I think that previous comment, along with those candles, and all we're talking about here is taking some risk off the table. So I agree. I don't think you can run a full FRP, but 2/3 would be fine with me. Let's go for ACF as a turnaround play, and a few people wondering, no doubt, why that hasn't made the list. And I see it, don't worry, I see it just like you, I see it, and I'm deliberately ignoring it. What was the other one I was deliberately ignoring? It's also gone up a little bit, but not as much as the main shows, right? So those lists are a little bit curated. There may be a few, and they're in a tiny, tiny minority where they do meet the criteria. This one doesn't meet the criteria, and I just won't put it in because I just know the leopard doesn't change its spots. And we could talk also about the number of black candles on the screen. And I just don't think there's anything really to see here for the time being. I'll be more interested in it when it starts to do something more interesting. And let's see how it goes sort of around here, because then we've also got that. So I think if you go for this now, I think you're taking the inferior setup out there. I think this far better. That's my opinion. ARD, a little bit like SVL, lots of black candles. It's going up because silver's going up. A bit like SVL, there's enough volume now. We've kind of reached that critical mass of volume where there's enough money coming in to dislodge those long-term dead weight holders. And we're getting now some movement, which movement will breed further movement, and we may see this go to 10 cents and get a trade out of it. Yeah. I helped out at Australian Stock Report. We helped float this one, by the way, all the way back then. Yeah. That looks good there. I can't fault that on the weekly chart. And it looks good here. I can't fault it either. MRP. Maintain your risk position if you got it. I'm happy to add risk if you don't. I think that's a decent setup. The volume sells it for me. PTN. I like this one. Yeah. Is it silver? I don't know. You kind of think it must be the way it's moving. But I know the reason why I'm going out here is just to see if there's anything really sinister out the back there. That's the one that you would worry about. The other ones are not sufficient to worry about, and that's miles away. So we don't need to concern ourselves with that. And zooming back in, like I said, I like this one. I've run it as a feature a couple of times. We've talked about that. I'm just going to move that up there and change the F to an M. Pretty self-explanatory there, isn't it? Pretty solid setup, if you ask me. RXL, I think, also falls into that category. It just keeping on, and I like that about it. So pretty simple on this. I don't think I need to spend a lot of time on these. If you require any further explanation on this, if you're new here and you need more explanation on these ones, let me know. But the double greens, the price action, and the candles in the bottom left, top right should pretty much give it away. We're talking about demand side control. Hayden's got FRP. Are we going for time? Actually, we're quite close on time, so please don't type any more in, so I won't do them. I've got Roscoe's fingerprints of supply demand as the last comment. And Hayden's got FRS, Forrestania Resources, which is not that one, don't panic. Look, like I said, Hayden, if we were in any other market, any other boring market, you'd be holding on to that with glee, wouldn't you? You wouldn't be sweating the tiniest bead of sweat on this. You'd be going, my Forrestania Resources is brilliant. I'm just waiting for the next move. But you're also now looking at having held this for 2 weeks or something, probably doing very well on it. But for the last 10 days, it's done nothing. You go, oh man, why am I not doubling my money every 5 minutes? And I get that too, and that is an actual concern for me right now because there is so much other stuff to do. But I still think this is an MRP. I can't see any reason to take any off the table. And in fact, I'd say next demand side candle, happy to add risk here because everything else is still good. Where would I start to be concerned and manage some risk? It would have to be a nasty black candle below there because this is hardly a level, is it? But nasty black candle below there, maybe that's a minus a third. Certainly down here because we're starting to encroach on that demand side candle and I wouldn't want that. So, yeah, look, decent candle beneath that, yes. And that's your next level there beneath the short-term uptrend room. But otherwise, it still looks very strong. And what I love about this in particular is just the lack of pullback. I mean, it's got this, make no mistake, ladies and gentlemen, this is one that we had in the oven earlier and we've pulled it out to show everybody at the end of the show. This was a 1 cent stock. It's now a 30-cent stock and it's pulled back a couple of cents. Seriously, that is incredible. And we can lose sight of just how strong this thing is when we're spoiled for all the other opportunities that are floating around us. But that looks very strong. Let's go. I'm still seeing demand tails here. I think it's fine if you look past some of those very small short-term issues, but we still have to have a path out, don't we? We still have an exit plan. Okay, we are getting close to the end, and then we'll head back up into the US ones. S&P ASX emerging companies. That's right. We were going to look at the other index. Is that what you mean? Let's have a look here. Well, the small ords, isn't that what we looked at? I can't remember. XEC. Is there an XEC there? If there is, I can't see it. XEC. And you're probably shouting at your thing there is. Well, I can tell. I can just go to, let's go to market index. Market index will have that. Go here. XEC. There you go. How good's market index? So that's the one there. So I just don't have it in that watch list. But if we go to, I know this is not the ideal, or we can go advanced, this is actually a trading view chart, by the way. They use the white label, the trading view, and that, there you go. So as a benchmark, that is incredible, isn't it? And this is what you want to look at. Hey, this is important stuff, everybody, because we do that thing on the show at the start, but for most of us probably listening tonight, we're not trading ASX 200 stocks, are we? We're way off the beaten track now. So we should keep an eye on an index like that and do all of our portfolio management on this, and it will tell us when to pull back on everything else, because we know we will need to pull back at some stage. This will not last forever, and this will end in tears for everyone else that's not in this webinar. FML and EUR for Araju. I've got $XEC, I'll find it. There we go. See, there you go. And let me go right click. You can't see me right clicking. Actually, you can't see anything because we're not there. But there we go. There you go. I found it. In ABRoke, I'll right click, watch list, add selected symbols to ASX indices, and it'll be in there for next time. Thank you for reminding me about that, Robert. Okay, right, just got FML. Oh, jeez, this is my favorite. This is my favorite chart right now. Look, Araju, that is too high. You can't buy that anymore. You've missed it. Sorry. It's too high. It's expensive. It's overbought on the RSI and the MACD. Okay. It's overvalued. And really, let's face it, what would Warren Buffett say? Really? About swimming naked when the tide goes out. Hey, Warren Buffett's got a lot more money than I do. Okay, make no mistake. And he's great at trading like Warren Buffett, but I just don't think you'll be great at trading like Warren Buffett. So let me obviously do the next bit, which would be to do that, because that's bullshit, and change this to what I really think, which is it's a picture of excess demand. Now, I don't know how high this thing's going to go. Today might be the high. In fact, we've got $2 coming up as well. So let me just hold back on the plus 1/3. Maintaining risk position, $2 is a round number for me, particularly if it spent some time at $1, and it actually only spent a little bit of time, but probably enough to create some supply up there. So I'm still minus 1/3, and you might say, Carly, that's mental. Why would you do that? Because it looks so darn good. It's going to blast through $2, and you know what? You might be right, but I don't care. I don't care. I've learned through just bitter experience that ignoring round numbers on this time, I'm going to ignore it. It doesn't end well. So I don't do it anymore. I just knock my risk out, and it's just third at round numbers. I do not ask questions. I do not pass go. Okay, let's go EUR. Now EUR is a little bit trickier. Okay, so we all know that these things often keep going, but that is that's a decent pop, isn't it? So if you can make yourself buy that, I don't know whether to say I'm proud of you because I really have converted you, or I need to say, well, sometimes you do have to say, maybe I might have just missed this one, or I'm just going to wait for a pullback, because that's a pretty decent pop there. That's that's more than double in a candle, and I think they announced a buyback or something. So anyway, not that should bother me, but I think, look, I wouldn't tell you not to, but I would say surely we can find something else that's closer to having a pop than that one. I know I'm contradicting myself there, but you have to draw the line at some stage. And if this thing was 50 cents tomorrow, it would not surprise me at all. David's saying, hi Carl, talked about 4DX 2 weeks ago, starting to look good again. Oh, there you go, just tickled. Oh, I tickled that supply. There's still supply there. There's still supply, just lurking, isn't it? Just lurking. What's your question? I should read it. We did go ZRP, and it has gone up since then. At what point to add back risk? I think the point to add back risk was this candle here. That was. I think that's too aggressive, and I can see why, but it's just too aggressive for me. I think it's here. And you might say, "Oh, Carl, that's too late." No, that's the one for me, because this, for me, with these candles, it just had to be such a major point of supply, and this is the first candle that tells me, well, actually, we've probably traded with them, but it looks like we haven't. Are these candles enough to undo the risk you added there? No, they're not. I got it. I got it. That's the mosquito. I'm winning on all fronts tonight. Okay, I would say that is not enough yet to go to flat, but I wouldn't want to see another big black one. I think it's okay. So MRP for me, but yeah, just watching here closely, and we'd love to get another bite at the cherry, but yeah, I think if we've had a good run on this, we also want to protect that a little bit. So happy to have the risk. I've written MRP. I'm not adding any risk just yet, and I'm just mindful that if this just turns out to be that false breakout, the supply's still up there, and we get a little washout here. You're quite correct on everything else you said there, David. CU6 from Hoozle looks very good. Yeah, happy with this one. Today's candle, it had a little upper shadow, but $5. This is not a round number. Why is $5 not a round number? Because we've been all over it. It's not its first rodeo at 5. So 5 just won't have that psychological impact. It'll have some, but no, we don't need to worry about that now. But to see a little shadow there is no surprise. And to have this powerful move, and really today's almost a pullback day, even though it's still up. Today's your pullback day. What does that tell you? So no, very happy with this one. MRP. In fact, I'm happy to add risk even on that candle. I still think that's a picture of demand side control. And I love it when things go up and don't pull back, because they tend to go up again. Okay, Roscoe's saying I was a fan of fingerprints of supply demand. Fingerprints of, but then we've got yes, but now we're point of supply. So fingerprints of supply of points of supply. So we'd be double using the acronyms. I can't use that one. But I see where you're going. Disciple of Demand and Supply Facebook group has 9 members now, says Peter, for those of you who want to join the private FB search for the name. Do you go to groups? I guess you go to groups, and there'll be a search window there, and look for Disciples of Demand and Supply. And I'll join that tonight, I promise. I forgot last week, but I'll join it tonight. Let's head back up the list, everybody. Heading over to our Trading View screen. And there were only a few US ones from memory and one Toronto one, so we'll be done fairly shortly. I know it's ridiculously late where you are. There has to be an easier way, doesn't there? So we've got lots of talk tonight, which is wonderful. And I reckon the first one, there's Roscoe's. And we're going to go here, and we'll go to TK, which is literally TK. Oh, no, that's TK in New York. We want the Toronto one. Tinker Resources. There we go. Oh, well, that's, yeah, look, it's a turnaround setup, isn't it? But I think we've seen way more exciting ones than that. But yeah, look, 100% turnaround setup. It's not terrible. As turnaround setups go, 7.5, 8 out of 10. Like, I mean, it's that good. Yeah, I'd even go so far as to 8. Look, we've got some clean candles coming in. We've actually got some clean price action. The volume's a bit ho-hum, but I can see where you're going. And if you're looking to diversify your types of setups, no complaints for me. Maybe you know what it does. So I wouldn't object to it. I just don't think out of all the ones we've seen, it would be one I would personally gravitate towards. Going to Adonis, who's got no Perry tonight, actually. So I don't think we've had Perry for a couple of weeks. Don't know where he's off to. That looks very strong. Martin Marietta Materials, I should say. Let me have a look at the left-hand side there. We've gone to the monthly chart. I meant to go to the weekly chart, but either way, we're not going to see any major points of supply, POSs, out there. And I actually like that better. Looking at the weekly chart, I think it looks even better than the daily chart. So this is a very strong setup. So very happy with that one. Little bit wobbly here on the price action, but no, it's not going to change the outcome here. Definitely happy with this one, and maintaining our risk position, or plus 1/3 on that one. Let me just there we go, and click save. And we'll go to your next one, Adonis, which is Caterpillar now. Oh, well, this looks great. A little bit of, oh, well, there you go. Look at that. Like, look at that. I wonder if you're on this one, Adonis, if you took some off the table on Friday, because that would have been, assuming this is, that's the first time we've been here. So, yeah, that would have been my prescription, isn't it? $500. And I know it probably annoys a few people. Carl, why? Just a number. Don't worry about it. That's just my model. So I would be running 2/3 risk position here on the basis of having taken 1/3 off the table at 500. But everything else is maximum risk. Maintaining, not maximum. Maintaining. See, that's the problem with them, isn't it? It could be maximum. You could go maximum risk position. No, maintaining risk position. It really doesn't matter if it's an M or an F, does it? Let's go to QCOM, but humour me for now. QCOM. I did it on Wednesday, so just to keep it consistent. I don't want to change it on Wednesday because I've only done one. I've only done it once, and it'll blow their brains. This one's got a few more problems. It's the old drunken zebra, very much so. I think Adonis, sort of wandering across our page here. Let's go to the weekly chart, see if there's anything above those tops. And there is. I think there's just a bit of work to do. Clearly, it's trying to break into a new trend. Clearly. So there's some good stuff going on. Where would it be? Like a 7 out of 10? 7.5? Like it's warm. I don't know if it's hot. Lots of overlap still. Lots of supply zones to contend with. So look, if you had it, I wouldn't complain. If you didn't have it, I just don't think there's a great urgency to chase it just yet. Let's go to Amgen, AMGN. And if it starts to trade white candles into that historical supply zone, then absolutely yes, it's going to look very good. This one has got a good start, but I think it just needs a bit more work. We've got a zone here and a zone here, and really all I'm seeing is a stock that has a history and a propensity to move sideways in a trading range. And that kind of proves it there. I mean, really, it's been in a trading range for 18 months. This is a good candle on the weekly chart, but it needs more for me. And I know the fear is that you give it too much, or you instead of buying it at 300, you end up buying it at 330. I don't think you'd have to wait that far, but this is a pretty serious point of supply. There's some decent candles there that started that, and there's some decent candles that finished it. You have to think, and it's off that level as well. There's probably still some supply in there lurking in the system, and I just think it's a bit hard for me. That's all. It is. I don't think it's aggressive so much. It's because aggressive is more down, space, and then up. It's just more of a trend trading range. Let's go to LLY. Let's see what we get here. Very similar again. Look, I love these candles, don't get me wrong. I think they're great candles, but where do you go? You go here, and then you go here. And if we zoom out, there's still there. Oh, but there's that. Oh, look, I don't know. Again, I don't have as much experience on these charts because I just flick past them, don't I? I just go tap. So I don't know. They may well end up being the trades I start watching over here. But for me, it's just stuck in the middle for now. So I think this is more of a flip a coin thing than moving towards the higher probabilities for me. But I can see what you're going for with those white candles, but I still think there's just too much noise in some of these big points of supply. And I think that's it. I don't think there are any other US ones there. If I have missed something, certainly pop it in down the bottom. David's off to bed. That's a good idea. Let's go back to here and finish up by reminding everybody that everything we discussed tonight was general in nature, has not taken into account your personal financial circumstances. Seek some professional help to determine its appropriateness for you. Of course, trading is risky. You could lose money. We saw at least a couple of trades in there that were 10 out of 10s that have turned into 5 out of 10s. I think literally there was one there that was a 10 out of 10 and now at best is a 5 out of 10. Is that unusual? No, that's not unusual. That's normal. That's going to happen. It's always you who's responsible for the stuff you do because it's your money at the end of the day. You've got to take responsibility for it. It's been an absolute pleasure chatting with you this evening, everybody. Hopefully you had fun. I certainly did. I think we had some really good discussions there as well, and fortunately we did come to some consensus, which suggests we're starting to think along the same lines, which is wonderful. All the best for your trading. Until we catch up again. Bye-bye for now.